Hey everyone, welcome to Stock Insights. Today we're diving into Frontline PLC, ticker FRO, one of the biggest players in the tanker shipping world. With oil prices swinging and global tensions rising, is FRO a buy, hold, or sell? We'll cover pros, cons, financials, dividends, and where it's headed by 2050. Stick around. This is a 6-minute deep dive. First, the good stuff. Frontline boasts a massive fleet of VLCCs and Suezmax tankers, raking in high rates like $43,100 per day in Q2 2025. That's thanks to disruptions like Red Sea rerouting boosting demand. Plus, their dividend yield is a juicy 8.5%, perfect for income hunters. On the flip side, debt is sky high at $3.6 billion, with a 158% debt-to-equity ratio. The shipping biz is super cyclical. One geopolitical flare-up can spike profits, but economic slowdowns tank them. Environmental regs are looming too, forcing costly upgrades. Let's crunch the numbers. Revenue hit $2 billion in 2024, up 14% from 2023, but net income dipped to $496 million from $656 million. Margins squeezed to 24% from 36%. Year over year, profits are volatile. Up big in 2022, down in 2024. Compared to rivals like DHT or Euronav, Frontline's 18% net margin holds up, but everyone's exposed to oil swings. Debts? They can pay them. Operating cash flow is $703 million trailing 12 months, covering repayments. But free cash flow went negative last year from fleet buys. Other income? Minimal. It's all about shipping charters. Balance sheet impact. High leverage means boom times amplify gains, busts hurt bad. Since IPO in 2001, investors have seen wild rides, 300% returns from 2021 lows, but long-term lags broader markets. Looking ahead to 2030, 2040, even 2050, Frontline's investing in green tech to cut emissions 20 to 30% by 2030 and 70% by 2040, aligning with IMO goals. Think dual-fuel ships for ammonia or LNG, part of a $1 trillion industry shift to decarbonize. Positives: rising oil demand from Asia could boost. Negatives: trade wars under Trump 2.0, Iran-Israel tensions hiking insurance, or recessions slashing volumes. Socially, labor strikes or green activism could disrupt. Politically, EU carbon taxes might hurt short-term, but reward leaders like FRO long-term. Dividends: FRO pays variably, latest 36 cents quarterly, payout ratio over 100%. Growth: negative 20% over 5 years due to cycles. No aristocrat status here, unlike steady payers. Short-term returns: down 18% last year versus S&P 500 up 14%. Long-term 15% CAGR past 5 years, beating S&P in recoveries but riskier. Versus global indices like MSCI World, it's a volatile diversifier, great in oil booms, meh otherwise. So, can FRO hit $1,000? Dream on current $21 price and declining revenue forecasts? Say no. It's a high-yield play for bold investors betting on tanker surges. Do your DD and subscribe for more. Like and comment. What's your take on shipping stocks? See you next time.